Welcome and hello. My name is SHAFIQAH binti KAMAL. Today I and my team will be presenting our group presentation assignment for ACC407 Fundamental Financial Accounting and Reporting Group Project Presentation. In this video, I will explain the purpose of assignment, expectation and limitation during conduct this assignment. So the purpose of this assignment is firstly to understand how the business records its transaction from source documents to financial statement. Secondly, to identify type of business organization. Thirdly, to define classification of business items. And the last one is to perform communication skills involving financial accounting and reporting. As we know, due to privacy concerns, detailed financial data may be unavailable. Let's talk about the background of the business. After several discussions, we agreed to proceed with one of food and beverage business, which is FAIRUZ Cafe, or we call FRC. So FAIRUZ Cafe is a sole proprietorship owned by a single individual, which is Tengku Syuhada binti Tuasu. So, FAIRUZ Cafe is located in Section 7, Shah Alam, Selangor, an area known for its lively food hunting for students, which is an ideal location for a quick service cafe. The owner capital contribution to this business is around 80,000 ringgit using personal capital to cover the initial startup costs, including renovation, equipment and working capital. The cafe specializes in offering a variety of freshly prepared meals, beverage and snack with a focus on affordable price and a quick serve option. FRC or FAIRUZ Cafe also provide both dine-in and takeaway service, catering primarily to a student, busy family and also tourists. Now, let's go through about business characteristic for FAIRUZ Cafe. As a sole proprietorship, meaning that the business owner has unlimited liability, which implies that the owner is personally responsible for any debts or any obligation incurred by the business. There is only one owner of the cafe, so that this is a single owner business. The owner has invested around 80,000 K of personal capital into the business, which cover initial startup costs including renovation, equipment and working capital. FAIRUZ Cafe utilize digital accounting software which allows the owner to systematically record transactions, track income and expenses and generate financial statement. This practice is important for ensuring accuracy in financial proper record keeping and also help owner make informed business decisions. This digital system also helps in organizing financial data efficiently and allows for easy update and adjustment. FAIRUZ Cafe was established in 2018 and it has offering a variety of freshly prepared meals, beverage and snack with a focus on affordable price and quick serve option for students, busy family and also tourists. As a sole proprietorship, the profit generated by the business are fully retained by the owner, who is responsible for reinvesting the profit back into the business or for personal expenses. This means where the owner keeps all the profits, contrast with the different business which is in partnership or cooperation where profit may be divided according to agreement or share. Now, let's move to the next topic, which is classification business item, which is asset, liability, owner equity, revenue and expenses. When we talk about asset is a properties owned by the owner that are expected to provide future economic benefits. Assets are clarified into two categories, which is current asset and non-current asset. So, for current asset, in this company, assets that are expected to be converted into cash or used up within 1 year or in short-term operational needs. For example, cash around 1,000 ringgit represent to the money that FAIRUZ Cafe hold in hand and petty cash. This is usually used for immediate transaction like purchases and daily expenses. And other than that, account receivable. Like example, for RM300. This is referred to the money owned by customer. This could come from customer who dine in but pay later. Usually this will happen when customer didn't bring any cash or internet connection, no internet connection during the payment. And for inventory, for example, like RM2,000. This is referred to raw material and finished good. This is include ingredients like dry and wet items, which are crucial for daily operation. So for the non-current asset, this is a long-term resources that are not for purpose of receipt, which is useful lifetime more than 1 year. So for example, is tangible assets like RM50,000. This is for vehicle, furniture and kitchen equipment that are useful lifetime more than 1 year.
Liabilities. Liabilities is represent to debt or any transaction that owner purchased with credit and must be settled within a year. For example, current liabilities and non-current liabilities. Current liabilities is a debt net to be settled within a year. There are two current liabilities in FRC itself, which is account payable and short-term loans. Account payable is represent to the amount that FRC owe to supplier to purchase food, beverage, and all the material that purchased in credit. Short-term loans. This loan has been taken for capital loan to cover the operational costs. Non-current liabilities. This is represent to long-term debt will need to be settled after more than 1 year. Usually, this loan will be repaid after several years. Owner equity. This is a represent to owner equity affected by both the initial capital investment and any retained earning and losses. For example, owner capital. The initial investment made by the business owner to start the cafe. This money was used for setting up the business, purchasing of equipment, and covering other the startup costs. Revenue. Revenue is the amount earned from business activity such as food sale, beverage, and snack. Category of revenue in FRC is sales revenue and other revenue. Sales revenue is the income from selling food, beverage, and snack from the FRC cafe itself. Other revenue. This is additional revenue streams such as catering and private event that include primary food services. In addition, this may not be the main activity of business. Expenses. The cost incurred in the process of earning revenue and keeping the business operational. These can be both fixed costs and variable costs. Cost of goods sales, COGS. This is represented to the cost related to producing the food and beverage. This cost is deducted from the sales revenue to calculate gross profit. Operating expenses. Operating expenses are usually divided into COGS and operating costs such as static salary, digital marketing, utilities, and maintenance.
Okay, now let's move to the recording process of the business food rush cafe. FRC accepts all types of payments such as cash, credit, debit card, QR payment, and online transfer. FRC also recording all types of sales transactions using their POS system, point of sales, to record all of the accounting cycle. Let me explain how the POS system fits into the food rush cafe business. First, source of documents. At FRC, the accounting process begins with the generation of source documents, which is the sales receipts and invoice that are automatically recorded by the POS system during the transaction. For purchases, FRC will receive invoice from suppliers, and these invoices are for recording inventory purchases. The POS system captures essential details including the date, amount, payment method, and itemized purchases. This transaction is automatically transferred to the journal, typically in a digital format categorized as a sale, cash receipts, or card payments. The second one is posting to the general ledger. The data from POS system is posted to the ledger accounts including sales and purchases. Operating expenses like salary, utilities, and maintenance also recorded. This can provide a comprehensive view of the FRC financial activities. And if there is any discrepancies, the teams will promptly investigate, and make the necessary correction. The third one was adjustment and journal entries. The daily transaction will be recorded and automatically transferred into the FRC sales journal. Sometimes, POS systems need adjustment for discount, return, or put and voided transaction. This adjustment usually enter the ledger account. The next one is trial balance. After the trial balance is balanced, adjustments are made at the end of the accounting period to reflect expenses, prepaid revenues, or depreciation. These adjustments are recorded in an adjusted trial balance. Last one is financial statement. These adjustments are recorded in an adjusted trial balance, which forms the basis for preparing the FRC financial statements. FRC teams will compile its income statement, balance sheet, and cash flow statement to provide a clear picture of its profitability, financial position, and liquidity.
We move to the strengths and weaknesses of the recording process. First, accuracy through automation. The use of a POS system ensures precise recording of sales transaction in real time, reducing manual error in data entry. Second, improve inventory tracking. The POS system automatically updates the stock level every time something is sold. This is good, this is help to avoid running out of item or having too much in stock. The third is time efficiency. Time efficiency, which is the system automated recording processes save time by minimizing manual bookkeeping, allowing staff to focus on other operational tasks. Fourth, organized account classification. The accounting system sort asset, liability, revenue, and expenses into a different category, then making financial report clear and accurate. Fifth, instant financial information. The POS system provides real-time insight into daily sales, which is help in monitoring business performance and managing cash flow. Now, we move to the weaknesses in the recording process. The first weaknesses of the recording process is system dependency. This is because employee will relying too much on the POS system can cause problem if the system has technical issue like freezing or crashing, which can stop transaction from being recorded properly. Second, manual adjustment needed. Some transactions like depreciation or end-of-year update are not automated and need to be entered manually, which can lead to many mistakes. Third, incomplete expenses tracking. The POS system tracks sales and inventory well, but other expenses such as salary or utility bill might need to be recorded separately, causing delay and error. Fourth, limited analysis tools. Basic POS system may not have advanced tools for analyzing financial data, so extra software or effort is needed to make detailed forecasts. Fifth, training and supervision. For this, staff need to be trained to use POS and accounting software correctly. Mistake can happen if they don't fully understand how the system works and don't follow the right step.
The conclusion is Food Rush Cafe used a POS system to make accounting and financial reporting easier and more accurate. The system automatically records sales, keeps track of inventory, and helps create financial reports, giving the owner up-to-date information about the business financial health. It automates sales tracking, inventory management, and the generation of financial reports, providing valuable real-time insight into the business financial health. While the system offers many benefits, there are still challenges such as reliance on the technology, the need for manual adjustment, and incomplete expenses tracking. By addressing these issues, FRC can further optimize its financial management, ensuring better decision-making and long-term business success. However, there are some issues like depending too much on the technology, needing manual updates, and sometimes missing some expenses. By fixing these problems, FRC can improve its accounting process and make its financial management more accurate and efficient. Best of luck to Food Rush Cafe for continued success and growth in the future. May your dedication, quality service, and delicious offerings continue to thrive and bring joy to your customers. Thank you so much, Food Rush Cafe.